have senior markets correspondent Kevin Green with us. Also taking a look at the big picture on the market, I will mention Oracle, folks, is up 32% now. Good morning, Kevin. What are you watching here?
Well, obviously, Nicole, as you kind of talked about, Oracle leading the way here for technology, and we are seeing the technology sector right now up over 1% in today's session. That's really kind of keeping us afloat here, as we do have some defensive rotation also taking place here today. Utilities catching a little bit of a bid to start us off here, but the market did start off very strong. If you're looking at the intraday levels, I'm looking at 65.55 as your first area of major resistance. We actually opened up at the highs of 65.50 to start the day here, so got fairly close to that level, seeing a little bit of a pullback, but I actually have a fairly wide range when you're looking at this chart. To the downside, looking at 6,500 as your first big area of support, and then 64.85. You can also see this yellow line at 65.30 that I have as a key area here. That's just a previous area of resistance that we saw back on the 5th of September. Could that be act as an area of support for this market? That could be the case here, but a very wide range. Obviously, we started off fairly strong. You want to see if we can actually kind of hold some of these gains through the remainder of the day. PPI came in better than the street's expectations. We have CPI coming in tomorrow as well. So we continue to make new highs, continue to make higher lows. And from a technical standpoint, Nicole, this is still in a bull trend. We have not seen the September woes that we were kind of expecting to start off this month, at least so far. Let's see if we're going to be able to hold that up.
Understood. I mean, when you look here at the record levels, pretty exciting. I mean, any final thoughts there? I know you want to talk about industrials too.
Yeah, no, I mean, once again, we continue to hold this consolidation or this channel, this bullish channel line to the upside here that we've been developing back since May. So if you're looking at just the technical standpoint, you can make the case 60, 650-ish could be your next area of major resistance for this market until we actually pull back. We continue to hold the 20-day moving average. We continue to hold the 50-day moving average. So that's also very key. And we have this MACD that's kind of flattened out, just showing that price action for the most part has been consolidating, but we could be looking at a little bit of a bullish cross. RSI also breaking out to the upside. So technically, we're looking actually pretty decent right now for the S&P 500. If we're looking at the industrials, I know you guys just talked about it in the previous segment, but I think this technical setup is actually very interesting, given the data that we had from PPI this morning. If you look at the XLI, I'm looking at a 3-year weekly chart here. We have this flag pattern. We've seen this so many times in so many different stock charts over the last week or so, and we are really kind of, once again, kind of consolidating. But the thing that you get a little bit concerned about is that MACD. We actually do have a bearish cross on that MACD for the weekly chart, the 12 EMA crossing below the 26 EMA. When we see that in the past, we at least go back and test the 20-week moving average. That's around 2.5 to say 2.7% from these current levels. And do we actually see a little bit more of a breakdown, or do we actually see a breakout to the upside? The other reason why I'm keeping this on the radar, if you're looking at PPI, 75% of the decline that we saw on the services front, Nicole, came from margins going lower for these for machinery and transportation services that are being provided out there. That's the big companies. That's the Caterpillars of the world, Deere, as well as the Boeing. So if they are seeing some margin compression, are they able to hold up at these current valuations? And I think this is going to be an interesting development to see over the next couple of weeks.
Okay, so from Deere to the home builders, tell me a little bit about how we are viewing rate cuts that may be likely along with the home builders. What's the story here?
Well, mortgage demand spiked significantly last week, Nicole. We have seen rates going down, especially if you're looking at the 10-year. You are seeing demand kind of hitting the tape here, and that could be actually a tailwind for a lot of these home builders. Now, we have seen some front running of this trade, maybe some anticipation that the rate cuts are going to spark demand, not only for new homes, but also existing homes, those renovations, those large ticket items that the Home Depots of the world and Lowe's really want to see kind of uptick because they provide higher margins. We saw a pretty decent drawdown yesterday, about over 2%, and now coming back, hitting that 20-day moving average. This is a daily chart. That blue line, that has been an area of support the whole way up. Let's see if we actually have a retracement back to getting back to those, that say that 125, 126-ish area to the upside here. The trend is still intact for the bullish move. But once again, a very aggressive move to the downside yesterday, but we had some really good fundamental data that could be a catalyst for this sector over the next couple of weeks as well.
All right, Kevin Green, great to see you on a record-setting day on Wall Street. Appreciate it.